Housing starts to fall in 2022. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. We're going to have a look at the latest housing forecast from the HIA, particularly what they're predicting for 2022. Now, we're all familiar with home builder. We're all familiar with how much money the government has thrown at that sector. And housing, well, it's the piñata the government loves to bash to get, all the economic activity to spill out. But the problem is, when you juice up a sector, when you flood it with money, you're not creating work out of nowhere. You're bringing projects forward. Projects that were planned to happen maybe a year later or in the future are being pulled back. And that's what, well, we're going to see here. So let's have a look at this from the HIA. So this is a summary from their housing forecasts. So material constraints add to the volume of work under construction. The Australian economy is roaring off the back of fiscal stimulus. There you go. Monetary stimulus and sky-high export prices. Well, until a few days ago. Oh, they're still doing well. Record levels of household savings are supporting strong levels of business and consumer confidence. All of this has led to exceptionally low levels of unemployment despite the best efforts of lockdowns. With such strong levels of demand, inflation is rising, but it is still years away from the Reserve Bank's increasing rates. When rates do rise, that will bring the home builder boom to an end. The economy is also benefiting from a record volume of new detached home commencements. As a consequence of more detached houses commencing construction and fewer homes reaching completion, the volume of new detached homes under construction has expanded to a record volume in all regions. This is compounded by longer construction times as materials shortages delay work. The elevated level of demand for materials and the speed that it emerged has resulted in demand outstripping supply for key building inputs, including materials, labor, and land. The delay in the supply of materials will see the impact on labor, and ancillary services remain elevated well into the second half of 2022. This is a positive for the wider economy as the economic stimulus is spread over more years, but a challenge for building businesses. New home sales were expected to decline following the end of Home Builder in March 2021, and they did. Despite the fall from record levels, sales for the 3 months to the end of July are consistent with the average for recent years. This suggests that demand for detached housing remains solid without fiscal stimulus. And there's other data coming out there that, buyer habits are changing, and we'll look at that in another video. And unsurprisingly, people want houses. There are also encouraging signs that demand for multi-units is returning ahead of population growth. Commencement of multi-units in New South Wales returned to pre-pandemic levels in March 2021, while approvals have remained elevated. Approvals for units in Queensland have also improved from the pause in activity during 2020. This demand for housing is coming from a shift in the location of the population and a move to lower density housing. The average number of people per house has fallen since the 1980s, and COVID may have accelerated this trend. This is adding to demand due to population shift to regional areas and a move to lower density housing. The renovations market is also midway through a record year. Unlike detached home building, we expect this trend will continue for a number of years due to the elevated savings and increased time spent at home. Oh, there you go. That's good news for everyone working in that sector. Despite the strong outlook for the next 12 months, without a return of demand for new housing from overseas migration, there will be a decline in new home commencements over the next few years. Well, you know what's going to happen. Come on, what do you think will happen, everyone? What do you think there'll be calls for? Here's the thing. They're building the quarantine facilities to allow people to move around the world. What's that going to do for international tourism, though? You don't want to fly somewhere to spend 2 weeks in quarantine. That's just crazy. Or maybe it's going to be testing at the airport, and then if you're infectious, they've got somewhere to put you that isn't just a hotel in the middle of the city. But still, the migration, overseas migration will return to Australia if we can, kind of keep our polished approach, or the luck that we've had so far with COVID. And if our reputation isn't stained too badly by our politicians, we'll have to see. Anyway, for these forecasts, we assume that migration starts returning from mid-2022 and results in a growth rate of 1.5% by 24-25. Even with this expected return of population growth, the current volume of new home commencements will not be sustained. So even with the predictions of migration returning and growth coming back by 24-25, we're not going to be at this level. And if we have a look here, I will bring up building approvals. You can see how high they've spiked, everyone, 15,000. So, I mean, this is not natural. So I'm not really surprised that they can't be sustained. We have a look here. This is the home builder application numbers from March of this year. Look how many tens of thousands of houses across the country. Not many in NZ. NT. NZ. I mean, we'll get them to join the Federation, guys. Come on. They'll lift our economic complexity. That's what we want. Anyway, back to this. So, a decline in commencements of new detached homes should be anticipated from mid-2022 when homes initiated by home builder are nearing completion. It is anticipated that there will have been 135,390 detached dwelling starts nationally in 2021, representing a growth of 32.5% over the previous financial year. This is a record for the number of starts in a 12-month period. We anticipate that it will be a short-lived record, with detached starts in the 2021 calendar year to exceed 143,100. This record is unlikely to be broken within the next decade. Okay, so we're at a decade-high boom fueled by government stimulus of the housing sector. But, famous last words, guys. What would happen? You never know. When there needs to be another injection into the economy, what are they going to do? They'll be doing housing. It's expected there will be 125,030 detached starts in 21-22, a decline of 7.7% from 2021, from mid-2022. However, adverse impacts will emerge from 2 years of lost population growth, higher building costs, and a shadow of demand created by home builder. And this is the future work that's being pulled forward. This will impair the detached sector, with the number of starts falling back below the average of the past decade. This will compound by a rise in interest rates from mid-2023. The decision on when and how strong overseas migration returns is a major risk to the demand for housing in the out years. With migration expected to slowly return in 2022, starts are expected to slow in 22-23, falling to 97,850, and then again in 23-24 to a trough in this cycle of just 93,770. Multi-unit starts are forecast to bottom out at 60,890 starts in 21-22 financial year. This is a decline of 7.9% from 2021. Local demand drives a return to growth from this bottom. The return of overseas migrations from 22-23 provides more growth after this. Starts are expected to grow to 61,310 in 22-23 and 63,370 in 23-24. This is a growth of 0.7% and 3.5% respectively. And we can have a look here in the charts. This is number of commencements, and there's the 230,000, there's the 210, and a drop in 23% to 163 by 2025. So what is the solution or takeaway to this that, well, now we're aware of it? Really what I've been telling everyone in the game I've been talking to, don't buy that jet ski. Don't go out there and spend that money. If you're in the housing sector now, if you're in the trade, if you're just making bank, plan that you're going to have a gap, or plan that revenue is going to drop. Just plan for it, guys, because these are future projects, and we'll jump back to here to see these are future projects that have been brought forward. See this stuff here, this bump, that should have been, this top here should have been over here pretty much. It's they've pulled it forward. That's what's causing this issue, everyone. Okay, so you need to plan, you need to have money set aside, you need to, well, not overcommit financially. And I'm sure most people are preparing for that, but sometimes that new jet ski, that new ute, they're buying that stuff on such a low credit card rate or low interest rate can be pretty tempting. What do you reckon? Anyway, guys, thank you all for watching this episode. Let me know your thoughts and opinions on this one in the comments down below. Are you working in the detached housing sector? Is it going gangbusters, everyone? How crazy is it going? What's your forward projections? That's the thing. You may be flat out and busy now, but it's what you've got lined up in the next 6 months that you've got to worry about. As always, thank you for watching. Please like, share, subscribe to the channel. Let me know your thoughts and opinions on this one in the comments down below. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can sign up for SelfWealth or Stake. You can use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy our merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day. I'll see you next time. Bye for now.